Digital Dynasty. We love you, and let's run this all the way up, bro. The floor is yours, my geyser.
Let's run it. Let's run it up. Guys, what's up? What's up? Neno, my brother, Manito, appreciate you, my G. We'll be seeing each other again soon. Different country, different month. I think that's kind of where we're at right now. But guys, it's a pleasure. And it's the perfect timing for this session because tomorrow we got FOMC. So we got we're gonna have some volatility tomorrow. Some of you might not know what that means, but yeah, you're about to find out. So we got some volatility tomorrow. We got definitely some movement. I'm gonna break down some charts. I'm gonna keep it basic enough for most of you to kind of keep up. And then I'm gonna also slide in a little advanced technique for those of you that are, that you've been trading for a little bit. And at the same time, always we're gonna keep discipline, trading plan, and trading psychology at the center of things. So remember too, guys, we will be live tomorrow on our live session on Go Live. We got back-to-back sessions that's in Spanish and in English. And of course, you will be guided by some of the best in the game with Zachary Hogan, Jordan Morgan. I think they're live right when all that news hits tomorrow. So if you're not familiar with FOMC, I'm gonna walk you through it. All right, cool. So let's see here. All right, give me a sec, guys. Perfect. All right, I had to make a little changes in here. All right, so let's dive into it. Y'all ready? And let me know in the chat. Actually, I'm gonna drop something in the chat. It's cool because you can do polls on here. You can do a whole bunch of cool stuff. Actually, you know what? I don't know if I can, but let me know in the chat. Let me know in the chat, guys. What's your favorite pair to trade? Maybe you trade indices, maybe you trade metals. So what are y'all trading in here? So that way I kind of know what to look for. All right, some of us here are on the stocks indices game. I see QQQ, NAS, US 30, S&P, ETH, Goldilocks, Gold, USCJPY, UCAD, NAS. All right, we got a lot of love for NAS and gold. Sometimes. Okay. The ZAR. Okay, y'all different. Euro odd. Definitely different. All right, so I'm gonna dive into it. Let's do it, guys. Okay, so let's get some chart work done here. First and foremost, what I do to start my week out every single week is I'll go to forexfactory.com and then I'll get a good grasp on what are the important times for the week. Since I'm constantly traveling, always make sure that you also have the right time zone. Guys, I couldn't tell you how many times I used to make this mistake and I had the wrong time zone here. So make sure it's in your time zone. Make sure you're plugged in here. And so this way it just makes sense. Let me spotlight myself real quick. All right, there we go. And so, cool. So you'll catch top right. You'll see what time it is. Make sure it's in your zone. And then what I do is I'll go to the week. Now, if you're super, super, super prepared, then you can go look at the whole month. We'll probably do that on Friday, and we'll see what next month comes for us. But for now, I mean, look at all these red folders. Oh my God, this is amazing. Look at all this volatility. I love FOMC week. I don't know about y'all, but these are the best weeks of the month because we have movement and movement and movement and movement. So here's the thing. There's kind of two different types of traders. There's the red folder, high impact news traders. And then there's the get away from me. I want to have nothing to do with the news. I'm not having nothing to do with it. So what about y'all? Are we red folder traders, or are we staying away from news? All right, some of y'all love the chaos here and then. Red folder don't scare me. I like chaos too. Y'all are I love it. So someone said don't even notice it. Okay. I don't know what markets you're trading, but I'll notice a red folder. I'll definitely notice FOMC news. But here's the thing, right? There's nothing to fear, right? There's nothing to fear because the movements that happen during these events, these are already orchestrated movements, right? These are things that are basically already caked into the market. So these news events, all they do is they accelerate what's the inevitable. That's it. So if you are using a higher lot size than usual, then definitely keep these moments in mind. If you're, you got to stay aware of who you're trading with. So sometimes you want to keep in mind slippage. Now, some of you may not know what that means, but slippage is basically where you have a stop loss and the market's moving so fast that because of who you're trading with, your order isn't filled exactly where you wanted it to be filled, and you actually end up getting filled later, usually at a worse price. I had a few instances where slippage actually was way in my favor, but that rarely happens. Slippage usually is not very fun. So every once in a while, though, it can be good, right? If something really good happens, could happen, it's possible. But I don't like red flags, but I love red folders. Talk that talk. I like that. All right. So with that being said, even tonight, and actually, you know what? I'll do this too. I'll go over in some Australian setups because we have news in an hour. I never look at Australian pairs, but we have news in a little bit. And the way I approach the market, it applies to everything, whether it's Forex, crypto, indices, stocks, options, don't matter. So we'll take a look at something. We might just get it set up for later tonight. That'd be nice. I don't know yet. You guys are going to find out with me. But majority of this session will be based around what happens tomorrow. Because FOMC, guys, this news event here, which happens roughly every 6 weeks or so, this usually is the most volatile moment of the month. And it can really kind of set the tone. I'll be honest, like this can kind of set up the tone on the higher time frames for a lot of these things. So we'll see what's cooking, and we'll dive into it. But let's go. All right. So I'll have you guys kind of vote indices or Forex to start. What do y'all want? Indices or Forex? I'm going to go based on you guys here. Indices, Forex, indices. Oh my God. That's pretty even. I'm going to go Forex. Someone said indices are toxic. Yeah, you need to plug into my sessions more. You got to respect. I need a little respect on these indices, please. That's the audacity, man. The audacity. Unless you like toxicity, then I mean, all right. So we'll start with Forex. We'll keep it easy. It's a little slower paced, right? So I'm gonna start, since we're about to go into since we're in Asian session, I'll start with some of the pairs that are on this side of the world. So guys, in the chat, please share with the team what are the 3 major currencies that are volatile right now. So let me know in the chat, drop it for the students, for everyone here, right? What are the three currencies that are volatile right now? So AUD, JPY, and NZD. Good stuff, guys. So with that being said, we'll take a look here at AUD to start, and then we'll slide into everything else. So I will be going over metals as well, right? So we'll be going over metals, crypto. We'll do a little of everything here. I'm gonna max out the next 35 minutes or so, 40 minutes. So, all right. Now, what you guys are looking at here is a 1 hour chart. And the first thing I do, and I'm going to actually drop some confirmations for you guys. The first thing I do when I look at a chart is I remind myself that the first thing to do is to not look at the chart. So what does that even mean? It means that the first thing you want to do when you approach the market is kind of remind yourself what is important, right? What am I here to really do and accomplish? And the most important thing is the discipline, is your emotional intelligence. So you kind of just want to have that instant moment where you're thinking, okay, you know what? As much as I want money, as much as I want to see these profits, as much as I want to, accomplish certain things and hit my trading goals, at the end of the day, none of this happens, at least not long term, if I'm not disciplined. So we want to just kind of ground ourselves real quick, and then we can approach the markets. All right. So after we do this, and let me drop these confirmations here for you guys. These are some of the things that I keep in mind as I approach the market. Let me drop this here in the chat for y'all. Here we go. So as you guys can see, then I want to have more awareness on which is structure. Now, if I'm looking at the market, usually I want to start off on the 4-hour and kind of go from there. Obviously, you can look at the monthly, the weekly, daily, but to be honest, based on where we're at right now, I don't really need to. I'm not going to give you guys any swing trades or anything, so I don't really care too much about that. But the 4-hour definitely gives us enough. Usually a good 4-hour chart will show you 2 to 3 months worth of information, and you get to understand what's the overall vibe of the market. You know, is it bullish? Is it bearish? And what we're seeing here as we look at AUD USD, we had a pretty aggressive bull run here in mid-July, but the truth is it just didn't really hold it down. The market's been just chopping away, working its way down, and it wasn't until we finally got back to here that the market started to shift again, right? We started to kind of lose momentum. So with AUD USD, we have been more bullish overall, and the retracement's been very slow. So if we now kind of dive into lower time frames, you guys will start to see, right? You had a pretty big drop here, and then the market started to accumulate. So for those of you, if you haven't studied Wyckoff logic and Wyckoff patterns, definitely make sure you're diving into those ideas. You have different educators that tackle those ideas on as well, like Siva, Rock, Zachary, Jordan. All these guys are always talking about these specific phases and how they play out. And these are created by or popularized by Richard Wyckoff. And really, it's just a representation of psychology. But so what do we start to see? We start to see the momentum shift. And as we're looking at these smaller time frames, what we can see is that for basically the last 2 weeks, we've been bearish, right? The market's giving us lower lows. And the reason we draw on the charts is just to keep ourselves organized. That's it. That's why we're doing this. So we have lower lows. You then have lower highs. So you know the market is leaning more towards continuing its way back down. Right now, it gives us again lower lows here. Okay, so the 1-hour time frame is lower. So based on this, right, based on how the market's moving right now with AUD USD, what is more likely to happen, right, at the moment? For us to do what? For us to get pullbacks in order for the market to continue, right? This is the more common idea here. So, and I think the Zoom is maxed out, if I'm not mistaken. So in case anyone's asking, I just tell them to be here on time next time. Plus I'm a special guest here. So you already know. I may have shared this a little bit here and there. But what I will say is this, right? Now we understand our structure is bearish. So we can lean a little bit more towards the market going down. Now, that doesn't mean we're going to sell now, right? We want to look for certain things in order for the market to give us a little bit of an edge. And so here's what we're looking for. Now, I don't trade patterns. I know that sounds really strange. You're like, what are you talking about? That's maybe all I've ever learned. But what we're trading is we're trading money. And what we're here to do is we're here to understand where is money getting in and getting out, and who is getting in and who is getting out. So we've been taught, right, these retail patterns, the most basic things, resistance, support, trend lines, and all of these things are true. You know, you're going to see these over and over and over again. But what's important is, what does that really mean? What does it mean when there's resistance in the market? What does it mean when there's resistance or support in the market? What are trend lines there for? So what we're looking for right here in this trend line is, or not in the trend line, in this trending market, we got to see, okay, where, and here's basically, remember the confirmations, right? I want to look for liquidity and I want to look for institutional money. So basically we're looking for money, but we're looking for retail money, and we're looking for that whale money, right? That big money, that smart money. So those are the things that we're looking for. Now, remember, these are the three things, and I'll put it here. I'll drop a little text here. All right. We want the support, resistance, and trend lines. That equals, right, retail money. So I'm going to put some sheep here. Here we go. A little sheep. So just a reminder, right? If you see support, if you see resistance, and if you see trend line, then you're seeing the masses, right? You're seeing the many. So this is, if you're brand new, that'll help you understand that. So if we go here, you see resistance, right? Resistance, resistance, resistance. So most people are selling at this moment, and they're enticed to sell, double top, triple top. And then all of a sudden we have this nice little spike up. So the market spikes up, starting from down here, it spikes up about 20 pips. And in the meantime, guys, let me know in the chat. Would you say that it's relatively predictable to where these sellers are going to have their stop loss? All right, where would they put their stop loss? Most people would be placing their stop losses right above these highs. So when price here spikes up, what is it doing? It's luring in. So it's eliminating retail sellers, and then it lures in retail buyers. Why? Because you also have what? You also have this break and retest idea that people are sold on. But remember, why does money get in and out of the market? What causes movement in the market, guys? You guys, let me know in the chat. What causes movement in the market? Fear and greed. Okay, what else? You're right. Emotions. But what's required for the market to move? Liquidity, right? It needs money. No money, no movement. Moolah. So we need money. So, okay, what lures in money? Right? What lures in money? So when there's a lot of positions in play, all right, that's the bait right there. And here's the hook. So we got a good old bait and hook. So then this clears everybody out, and then down goes the market, and it goes in the intended direction. So what we can see here, guys, is that we have a very intentional buy position. And then what follows next is the imbalance. So what we're waiting for is for the market to get to this area over here, because there's buyer's money left behind. And so there's money here that can be used, that will be used in the future. So once price gets back into this area, we can see reversals. Why? Because this money, these buys, there's trapped buy money right now over here. These can turn into sells over here. So that money kind of frees up, right? That money frees up, and then sells, down go the sells. So that's what we're waiting for. So for AUD, USD, we could be waiting for a sell. Now, before I send you this screenshot, you need to understand one more thing. And this one thing that I'm about to tell you right now is what separates even good traders, like great analysts. This one thing is going to separate you from everybody else. And it's the following, that this chart does not move by itself. You can't look at the markets just by one currency pair or one indice. It's not moving by itself. It's a whole machine. So AUD USD, we can analyze this chart and have a pretty good understanding of what it could do. But there's other influences on this chart, and this also influences other charts. So it's almost like you have to approach this like chess. There might be a play, it looks like the play is over here, but in reality, the play is over here. In reality, it might be NZD USD that might be giving us the sell opportunity. So we can't just look at AU. We have to understand, okay, what else correlates with something like this? So I'm gonna give you guys a tool, a resource. And I use this, and I've shared it before, but this is going to be a nice little cheat sheet for you guys to see, okay, well, what currency pairs move together? What metals might move together? What's the play here? So you guys can check out here some. There you go. All right. So what correlates best with AUD USD is going to be NZD USD, right? These are like brothers and sisters, right? PB and J, whatever else. So, and I'm going to give you basically, this is what I do. And I do the same thing with indices, mostly indices, because I don't really trade Forex too often anymore. But, and that's just on preference. There's nothing that's better or worse. It's just what makes more sense for me. But here's what I do. I'll look at AUD USD and I'll look at NZD USD. And what I basically do is, and I have it written here, right? I'm going to wait and see how price gets to the point of interest. And if AUD USD, if AU, right, if price moves into this zone first, if AU gets here before NZD USD, so if NZD USD is kind of lagging behind, then I'm probably going to take NZD USD. And here's why. You guys see how there's some imbalance right here in the market, like it's spiked up, right? Cleared out the sheep and then just melted. Imagine, and here's where I like to split the charts, right? So I'll split them like this. 1 second. Okay. So we got NZD USD on the left and we have AUD USD on the right. So we got them side by side, right? So they look pretty similar. Would you guys say? They're relatively similar. So there's some easy ways to kind of get a heads up on which one's going to hit first. You can use Fibonacci if you want. So this one way, use fib levels. So you try this out like this. And you go, okay, well, NGD USD right now is around the 38.2 pullback. Okay. Meanwhile, you can already see it. AUD USD, it's actually already above a 50% pullback. So the retracement's happening a lot faster with AU than it is with NU. So what does that mean? There's a good chance, as of right now, this could change. Sometimes it changes. With Forex, not as much. But if AU, right, if we get AU here first, then there's a good chance that NZD USD is going to be trailing behind. And if NZD USD is trailing behind and we can see, okay, well, NZD USD has this imbalance that it's still got to fill, it's going to keep going up, and it's got this buy that it wants to close for a sell. So if something's going to push the market up for NU, and if NZD USD and AUD USD move together, then it'll probably keep pushing AU up. So this is one of the main reasons why you might be getting stopped out on a quality setup. You ever notice that? Like you might not trade retail anymore. And you're approaching the market like how you've been taught. You're like, man, but here's the retail money, here's institutional buys and sells, and I'm still getting wigged out. And the last piece of the puzzle that you might be missing is that you're just trading the wrong pair. You might be trading GU when EU was really the one to take. You might have been trading AU when NZD USD, that might have been the winner. So you want to keep an eye out on this here. And that's what we're going to do. So I'm going to actually put this over here. And then I'm going to send you guys a screenshot like this, because I do think that it's going to be better if you look at the market with them side by side than looking at this independently. All right, guys. So what you can also do is place alerts. So you can use your tools, place an alert for NZD/USD close to where it would come to, and then same thing with AUD/USD. So if you know you're waiting on one of these to hit, and here's the thing, they might not even play tomorrow. These might not even happen tomorrow. But if they do, if you get that AU alert first, you already know, okay, then NZD/USD is lagging behind. That's the one I want to take for sure. All right, for sure. How do I do what? So here's AU and NZD/USD. Now what I'm going to do is I'm going to do some quick updates here. I'm going to post these on my Pip Talk. So let's see here. Today's the 25th, yeah? All right, Apple Music. It's not your time right now. All right, 23. AU versus EU. Cool. So I'll post this here. Yeah, in a bit. All right. So now we have those set in stone. And this is just a 1 hour. We haven't even zoomed in yet. There might be something else. With that, isn't US 30 the lagger with indices? It changes every day, all the time. With that correlation website, are we looking for the pairs the highest positive percentage? So if they have a negative percentage, that's a good question. So if you look at this, and that's actually something that's super useful too. If you're looking at this correlation website, right? And you're like, all right, cool. Here's AU, and here I just clicked on AUD/USD, right? And if I'm looking at this on a, let's say like a 1 hour chart or something, then it's telling me the top correlated ones are AU and NU, AU and RCHF. Cool. Negative ones are AU and USD JPY. So we could do the same thing, right? We could do something really similar, but it's going to be flipped. So what could happen? That means that if AU looks like it's going to come down, then UJ might be a pretty good chance it's going to go up. Or if we, for example, let's say the market gets to here on AUD/USD and it's going to reverse, then you might be seeing the same thing happen with USD/JPY, that it's going to want to reverse. So that's what you can do. Now, these aren't as clean as AU and NU, but they're flipped. So a good example is, let's see, USD CAD and oil, USD JPY and gold are usually a good one, that they're kind of flipped in the way that they move. So yeah, some couple things you guys can keep in mind. So, okay, so we could do the same thing, and we can look at Euro USD and then GBP USD. So GU, all of a sudden, GU looks pretty similar to these other guys too, right? And so at the moment, if we're looking at the market on the 1 hour, we're going to, and I'm not going to do this. This is going to get too confusing. I'm just going to look at them one at a time for you guys. But you can see, okay, well, EU, Euro USD is bearish. So I can expect pullbacks for this to go down. Doesn't mean you can't buy on the way up either. And if we want to get more detail, then we can go to the smaller time frames. Now, when you're trading against the momentum, you just want to make sure that you know that, because if you don't, then you might get caught up in a good trade, but then you might hold it for way too long. So at the moment, does it seem like there's something that we could take right now? Yes and no. We could have right here. You guys saw a big drop here before it quickly went up. So when the market dropped like this wasn't to give us a lower low. It drops this fast and it recovers this fast because the real intention of this was to get buyers out of the market to then really push the market higher. That's why the market then reversed once it pulled back right here. So this setup already played out, but this was an idea. However, trading this during New York session, that's good, right? That's a qualified entry. So right now with EU, smaller time frames, I'm not really looking to do much outside of the similar idea as we have over here, where we'd have to pull up quite a bit. Now let's take a look at GBP USD. GBP USD is a little different because GU we are actually getting a change in structure. So we had lower highs, lower lows, lower highs, lower lows. Do you guys see the setup that played out right here? Can you guys see that? Did anyone take this by any chance? You had the retail sellers right here. You had this intentional push to the upside right over there. So when the market then gave us this big push up here, the market worked its way down. We got a lower low. Market recovered, but then just chopped up. Then during London session, because the timing in which these things happen is really important. So GBP, which is right, Great Britain, Great British Pound. So this happens during London session. London session is more volatile in Europe. So the pound's going to move a bit more. And here's where it goes down. And I'll actually give you guys, take a look at this. Monday, 215, 230, 330. We had volatility. So what are the chances, right? You got to think, connect the dots, follow the money and the timing at 215, 230, and 330. When did this happen here? Oh, look at that. 2 o'clock, 2:15, it starts to dump. What are the chances that the market perfectly comes in line to our setup at this exact time? And it's followed by some money. So here's the thing. You might be thinking, but Mike, this is GBP. The news was for Euro USD, for Euro. Guys, Euro and GBP, these are best friends. So they're going to make each other move. Right? They're going to make each other move. So these are hidden. There's hidden fundamentals sometimes. If you see an Aussie, an Australian news event, it'll probably move NZD too. So what happens then, right? Then we had that 3:30 news event, and this was GBP. And guess what, guys? There was support here lined up, and that news pushed the market down just a bit more. So this was one of those opportunities where you had, give or take, an excellent 2.5 to 1, 3 to 1, normal exits in the market. But here's the thing. All that's nice. Lower lows, lower highs. We had some lows here, right? Kind of stabilize. They start to accumulate. But now we're getting higher highs. You guys see how the market here has now shifted momentum. So now GU, it's looking a little bullish to me. And not only did we get above this previous high, but we've stayed above this all the rest of New York session and Asian session. So it's been about 6 hours that price is staying above, hovering above this previous high. So in my book, we went from having lower highs, lower lows to higher highs. We are now in a bullish environment for GBP USD. Everything else is pretty bearish. This is bullish now, at least on the 15-minute. So could we get pullbacks for the market to continue? Yeah. And let's look at how the market moved around out of here. If we're looking at smaller time frames, now we're in the 5-minute. You see how we worked our way down from like the 4 hour, the 1 hour, the 15, the 5. Guys, we've maneuvered around out of this price really well in a healthy way. So the market comes down, goes back up, aggressively goes down. You see how there's not a lot of money left behind. What you want in the market, right? You want the market to have healthy pullbacks, healthy extensions, healthy pullbacks, healthy extensions, healthy pullbacks. What happened here was after this pullback, we didn't really get another one. So from here, the market just kind of flew. So this was one more drop before the market took off. So we really might get some reversals around this area. And the reason there's a good chance that this is where the market reverses is because everything else already moved in a really healthy way. right? We pulled back down, extended. The pullback was deep, came back into previous structure, and then off we go. So we might have a pretty good setup on GBP USD around these areas. This could be a great buying zone. If we compare this to EU still looks pretty bearish. GU though, GU looks like it can reverse from this zone. So with this being said, I'm gonna leave this this setup here for y'all. GBP USD, and so the entry is here. Now the exits. Now let me ask you guys in the chat, what makes you get out of the market? Do you have a predetermined risk to reward? So if you're up, 2 times more than what you risked, you're out. 3 times more, is it maybe only based on the market? Maybe it's just structure, liquidity, Fibonacci. So I'm seeing some equal highs over here. So I think we can target these levels. Let's see here what you guys change a character. Okay. So I think a healthy exit here would be for us to target something like this. We know that institutions by default are going to be hunting for where they have equal highs or lows, where there's a pocket of retail money. So I'll leave you guys with this one right here. GBP, USD. Let's see. All right, so GU. Looks good, looks good. All right, cool. I want to make sure I want to get through, and I'm moving slow right now. USD CAD, this one we talked about last week, Friday. Another textbook setup here for us. We saw the spike up, clears this, makes lows, pulled back, clean sells, right? Friday evening, wasn't looking to trade this, to be honest. I didn't want to hold anything over the weekend. So this one did leave without me, but I know some of you were plugged in. So y'all are good on this one. Nothing new here. Nothing for me to trade. USD CHF, same thing. I'm not really looking for anything there. USD JPY, a lot of squeezing. So when I look at this, I see that the market's trending this way, and it's kind of squeezing in both ways. So I'm not really forcing any ideas over here. I'm good on staying out of all of that. And then we have gold. Now gold, man, gold broke my heart today. Look at this one, huh? This is just sad. Just sad. Was this 4 pips, I think? Rough. So and the funny thing too is I thought maybe we would get a chance because of silver. Silver kind of just gave us a little trend line, so it might come back down again sometime soon. But yeah, gold's super bullish, right? So from here we finally got the flip. We had some smaller time frame, so we've been bullish on gold, right? Higher highs, higher lows, higher highs. The market is pulling back, so cool. It gave us a nice pullback. We got a pullback over here. Let's see, a couple spots opened up on the Zoom, guys. So I know a lot of people were fighting for some slots. So I'm still gonna go over indices here in soon. So you could let your people know that there are some slots back open on the Zoom. But anyways, so we got in between that 786, 886 pullback. It's clean. And guess what, guys? Guess what? No surprise. No surprise. We had some news events this morning. So at 9 a.m., and we talked about it on the live session, we saw equal lows here. Right there. You see that? Right here. Whoa. So seeing that you had support, and all of a sudden it's like we're really close to these equal lows. I'm like, all right, guys, I'm pretty sure we're going to sweep these lows. And then from there, we're gone. And silver didn't really go deep. I thought we were going to get silver into this imbalance. And with that, I thought that was going to trigger our buy for gold and then go. Just missed. This close. So it's all good because now, right, the market has reversed. Because why were we even trading this in the first place? We were trading this because of this huge sell that we saw for about 136 pips. So this happened Monday of last week. And when the market goes aggressively in one direction just to recover and reverse, there's a lot of money that came into the market here that took out buyers and lured in sellers. And so we were waiting for the moment for when this money here that was used to sell came in for the buys, and that happened just over here. And so now we have officially reversed from the zone, right? This was that point of reversal right here. So this right there was mitigation. We have it just right there. Okay. So happened here. So could we get another chance? Right? That's the true question. Could the market pull back down and give us another shot? Right? Is gold gonna be nice or not? And so let's take a look at it. Right now, I just zoomed in. I'm on the 5-minute. So we had support. All this money is no longer here. And in perfect timing, the market spikes down on the news event. What a coincidence, right? So we see the market give us one of these, spikes all the way down. Okay. And then from there, the market goes up, little pullback, and just keeps going. So I'm just trying to give you guys as much detail. I am giving you as much detail as possible. Look at this. So from here, we see it dump down, little pullback, nothing too deep, and then the market keeps going. So somewhere over here, we're looking for the market to reverse once again. Probably at these lows. So you guys see how we've reversed off of here. We have like pretty common reversal zones. So I'm going to just actually narrow it down at one more time. And right around this zone is where I'm looking to buy. So this area here is what I like. This squeezing means there's going to be big things that happen first. So we might get a drop before pop. And I like this especially because we are seeing higher highs as well. So structure, we are bullish. So let me extend this out a little bit here. And this is kind of what we're looking for gold. And we'll see where exactly we take a buy. You know, we might have a right around a 20 pip stop. Might be a little tighter. We could go maybe a little bit lower. It just depends on preference, guys. But the risk to reward is pretty excellent. So it just depends on your style. You know, you don't need a massive risk to reward to do well here. You really don't. A lot of people really overestimate what they need in order to make some solid, consistent income. So is there a chance for this to go super high? Yeah, for sure. But for now, we'll just leave this one at 3.5. And this is going to be the setup. So you're probably asking yourself, well, if it's going to drop so much, why wouldn't I sell? The problem is we don't know if it's going to drop yet. We know that at some point, eventually we'll get over here and I can buy, but I don't know exactly when it could sell because this could just spike up and then drop or just keep going and not. So never, ever take the trade out of assumptions. What I would love to see is for silver to also actually get below all of this. If silver gets below all of this, and that puts gold into our point of interest, that's good. That's what we're really looking for. So gold, so that's metals. And then now, for those of you that waited till the very end, we will go over indices super quick. Let's see, DXY. Looks like it can pull up before it drops again. Oil finally got to one of our key levels that we've been waiting for. So we've been talking about this for I want to say like months. And we were looking to get see oil back over to this area. So I told a lot of you, like, yo, guys, like, this is probably a good swing. And yeah, gold is up, or oil is up a healthy, almost about a 20%. So I do think we're getting closer to where we will see a pretty major reversal on oil. I think we can see that getting a little bit over 80. I think we'll see that. But until then, I mean, yeah, I'm chilling. So these are the zones for oil. So soon it's coming. And especially, guys, considering how, like, what are just traditional retail trend it's giving here. What this is going to drop, and it's going to drop hard. Remember me. Remember, I'm telling you this right now. When it does, it's going to be aggressive. So, okay, that's oil. Peso, man, shout out peso. Yo, you see this? Nah, man, I'm nasty. I'm not gonna lie. Like, come on, bro. From 2016, 7-year snipes. Are you serious? Yo, we talked about this last week. Last week, while we were in Tulum, we literally talked about this. We talked about this, guys. Right here. This is where I was getting disrespected in Mexico. Man, they were really overcharging out there. So you're probably asking yourself, why this zone? Right. And I have another call. I know you're on this call right now. So the person I have a call with right now. So this is part of our training. No longer the American dream. It's the sueño mexicano. Yo, the sueño mexicano. I love it. I love it. El sueño mexicano. Well, I mean, yes and no, because we are playing off of a massive level. So I think it's about to be the American dream again. So enjoy it while it lasts, you know? But we're probably going to be approaching these 18.5, 19 levels here soon. And we'll see what happens from there. But I want to show you guys real quick why I have this zone marked up. So we'll go right over here. And when we're looking at the weekly chart, what we had seen over here was on a weekly level, you can't quite tell. It looks like it leaves imbalance, but you don't really know because in a week, there's days and hours. So you kind of have to get into it here. So you can keep that light off. So from here, we can dive into the 12-hour. And what do you guys see? Right, you see a pretty aggressive drop and the push up. So you already know, okay, hold up. There was a big sell left over here, and it took basically 7 years to go get back. That's weird. So now we go into the 4-hour, and now we really see it, right? Now you guys can really see it. Market dips down to here, fills in balance, pushes up. Goodbye. Literally, we just never came back for this. This is December 2015. So over 7 years, 7.5 years. Think about that. That's patience. I barely started looking at charts at this time. Barely. So we had all of this imbalance. Sick. And this is really what it came down to. So leverage positions here. Good Lord. And we could see it. I mean, it was pretty evident. So let's see, where did the market really reverse off of? And we even got not only was it just a random, like, oh, just maybe hopefully you get something here, but then you get a shift in momentum here on smaller time frames. On the 1 hour, not as easy to get into because you do get the higher high here. And when it pulls back, you don't get a really deep pullback. So we still might get over here somewhere. It's possible. I would definitely have an alert. If the market comes back to here, that's a swing right over here. But let's go to the 15 on the peso. And you start to see the shift, right? This was really probably the best entry that you could have had was over here. And we see equal lows, right? Support, support, support. Market dips under. Finally get a higher high right here. So now you see the 15-minute goes bullish. The market pushes down, and just like clockwork, last Thursday, New York Open, market dips down to here, really respects previous lows, and then off it goes. That's the peso for you right now. So now, honestly, I think we could come back down here one more time because we see a very aggressive drop on that New York Open, and the market leaves an imbalance and keeps going up, and we didn't get back over here. So I think we might just kind of spike wick into these levels before the market runs. So, looks interesting over here. Accumulation, you're getting confirmations on higher time frames too. It's not a bad idea. Where did I draw this to? Hold on. Oh, it's just like an infinite. Okay, it is what it is. So let me get peso out here for y'all. This could be a very, very long-term swing. A very, very long-term swing. Let me just draw this here. And then where's that moon? Get a little moon, some moon action here. Where even is a moon? Hold on. I'm getting there. This is a long one. And I still gotta do. I believe there's another call happening right now too. So my bad, Neno. Or AWOL. If y'all got something else going on. But your boy's not quite done yet. Yeah, all right, whatever then. Let's see. We got a little happy moon over here. Oh, no, right there. There we go. Okay. So draw it out for you guys. These are very important things. Okay. Here we are. Peso moon. All right, so USD Mexican right there. Oh, I'm so sorry, guys. I have to wrap it up there. My bad. I literally just saw the chat. Much love to y'all. If you want to see this recorded, I'll make sure it gets to you. I didn't even realize this is the same link. But if you wanted to see indices, it's going to be okay because I will be live on Go Live, right? I will be live on Go Live. So you guys will have everything you need to know before the big news event tomorrow morning. So don't miss it. I'll see you guys later. Until next time.